What is happening, crypto and finance enthusiasts? Get ready, because the news cycle is absolutely exploding, and you are not going to want to miss a single second of this update. The markets are moving at lightning speed, and we've got the inside scoop on the developments that are shaping the future. From major corporate strategies to potential market shifts, we're diving deep into what matters most. Prepare to be informed, get hyped, and stay ahead of the curve. Let's get into it. First up, we're talking about a potential historical trend reversal for a certain digital asset as we head into a notoriously tough month. Could this year be different? We're breaking down the indicators that suggest a possible break from a long-standing pattern. Then, we shift gears to a titan of the digital asset space, exploring a bold thesis that could see it fundamentally alter the financial landscape, even challenging the dominance of the number one asset. Get ready for some mind-blowing projections and strategic insights. Next, a corporate player is making massive moves, aggressively expanding its digital asset reserves with a plan to become the undisputed leader in holding the top cryptocurrency. We're talking billions, bold strategies, and a race to the top. And finally, we're looking at the technicals and sentiment that could be signaling a significant price adjustment for the leading digital asset. Is a major support level about to be tested, and what does history tell us about this upcoming period? You need to know this. Make sure you smash that like button, subscribe for all the breaking news, and hit that notification bell so you never miss an update. Let's go. September slump incoming, a test for Bitcoin's resilience. As the calendar turns to a historically challenging month for Bitcoin, all eyes are on whether the digital asset can break a persistent bearish trend. September has earned a reputation as a difficult period for Bitcoin, with a pattern of declines observed over the past decade. This year, however, market watchers are keen to see if a new narrative will emerge, potentially defying the so-called Red September curse. We're diving deep into the technical indicators and market sentiment that are painting a picture of potential volatility, and whether Bitcoin is poised to buck the trend. The recent performance of Bitcoin has shown a significant downturn, with a notable 6.5% drop in August. This decline ended a 4-month winning streak and coincided with substantial outflows from US-listed spot Bitcoin exchange-traded funds, ETFs, which saw approximately $751 million depart, according to recent data. This outflow signifies a shift in institutional sentiment or a period of profit-taking after an extended bullish run. The breach of several key support levels further amplifies concerns among investors. Specifically, Bitcoin has fallen below the Ichimoku cloud, a widely used technical analysis tool that can indicate trend direction and support resistance zones. Additionally, it has dipped below the 50-day and 100-day simple moving averages, SMAs, commonly seen as indicators of short to medium-term momentum. These breakdowns are critical as they often precede more significant price movements. Adding to the bearish outlook, Bitcoin has also pierced crucial horizontal support zones. These zones were previously established by the May high of $111,965 and the December high of $109,364. Such breaches suggest that the previous levels of buying interest have been exhausted, and downward pressure is increasing. The technical indicators are reinforcing this bearish sentiment. The Guppy Multiple Moving Average, GMMA, which analyzes the relationship between short-term and long-term moving averages to gauge trend strength, shows the short-term EMA band crossing below the longer-term band. This is a classic signal of bearish momentum. Furthermore, the weekly MACD histogram, another momentum indicator, has fallen below zero, indicating a transition from a bullish to a bearish trend. These technical signals collectively point towards a potential sustained sell-off. Analysts are projecting that the price could fall to the 200-day SMA, currently around $101,366, with a possibility of testing the psychological barrier of $100,000. The technical outlook is further corroborated by historical seasonal trends. Data from CoinGlass indicates that September has been a bearish month for Bitcoin on average since 2013, with an average return of -3.49%. Bitcoin has closed lower in 8 out of the past 12 September months, underscoring the recurring seasonal weakness. For the bulls to regain control and negate this bearish outlook, overcoming the lower high of $113,510 set on August 28th is considered crucial. This level represents immediate resistance that must be conquered to signal a potential reversal. The community is abuzz with discussions about whether this September will follow the historical pattern or mark a turning point, with many closely watching the ETF flows and macroeconomic factors that could influence Bitcoin's price action. But what if this bearish trend is just a setup for something even bigger? Stick around, because next we're diving into a bold thesis that could see a major digital asset fundamentally alter the financial landscape. Ethereum's bold future, a 100x vision fueled by institutions. A groundbreaking thesis suggests that Ethereum could be on the cusp of a seismic shift, potentially challenging Bitcoin's long-held dominance. This ambitious projection is rooted in the growing institutional adoption of staking and the potential for Ethereum's monetary base to flip that of Bitcoin. We're exploring what this means for the future of digital assets and the established financial order. The narrative surrounding Ethereum's potential for a 100x return is gaining significant traction, driven by a confluence of technological advancements and increasing institutional interest. At the heart of this thesis lies the burgeoning market for institutional staking. As more large financial players enter the crypto space, the demand for yield-generating assets like staked Ether is expected to surge. Staking, the process by which holders lock up their cryptocurrency to support the network's operations and earn rewards, is becoming a cornerstone of institutional crypto investment strategies. This mechanism not only provides a passive income stream for investors, but also enhances the security and decentralization of the Ethereum network. The increasing participation of institutions in staking could lead to a significant portion of Ether being locked up, thereby reducing its circulating supply and potentially driving up its price. Furthermore, the concept of Ethereum's monetary base flipping Bitcoins is a key component of this bullish outlook. While Bitcoin is often referred to as digital gold due to its fixed supply and store of value properties, Ethereum's utility as a platform for decentralized applications, dApps, smart contracts, and its evolving monetary policy through mechanisms like EIP 1559, which burns a portion of transaction fees, presents a different kind of value proposition. If the total value locked in Ethereum's ecosystem, including staked ETH and the economic activity within dApps, surpasses Bitcoin's market capitalization, it would represent a monumental shift in the digital asset landscape. This flip would signify that Ethereum is not just a cryptocurrency, but a foundational layer for a new internet economy, attracting even greater capital flows and innovation. The potential for Ethereum's monetary base to expand significantly is tied to its utility and the ongoing upgrades to its network. The transition to proof-of-stake, POS, was a major step, making ETH a yield-bearing asset and attracting institutional capital seeking returns. Future upgrades, such as sharding and further Layer 2 scaling solutions, are expected to enhance Ethereum's throughput and reduce transaction costs, making it more competitive and accessible for a wider range of applications and users. This continuous development cycle positions Ethereum as a dynamic and evolving platform, unlike Bitcoin's more static monetary policy. Analysts are closely watching the net staking yields and the total value locked (TVL) across DeFi protocols built on Ethereum. A sustained increase in these metrics, coupled with continued institutional inflows into staking services, could validate the 100x thesis. The implications are vast. If Ethereum's ecosystem value surpasses Bitcoin's, it could redefine the hierarchy of digital assets and attract a new wave of investors who prioritize utility and growth potential over scarcity alone. This would not only benefit ETH holders, but also boost the entire decentralized finance, DeFi sector. The debate is intensifying within the crypto community about whether Ethereum's utility and staking rewards can truly outcompete Bitcoin's scarcity narrative in the long run, with many seeing this as a pivotal moment for the second-largest cryptocurrency. But while one digital asset is aiming for the top spot, another company is making a massive, multi-billion-dollar play to become the undisputed leader in holding the #1 crypto. We've got the details on their ambitious plan. Metaplanet's billion-dollar Bitcoin blitz, a race to overtake MicroStrategy. A Japanese tech firm is making audacious moves in the digital asset space, aggressively expanding its Bitcoin reserves with a bold plan to surpass a major industry player. This corporate treasury strategy is not just about accumulating Bitcoin. It's a race to become the world's largest corporate holder of the cryptocurrency by 2027. We're breaking down the massive funding rounds and strategic decisions driving this ambitious goal. Metaplanet Inc., a Tokyo-based company, has significantly boosted its Bitcoin holdings by acquiring an additional 1,009 tokens for $112 million. This latest purchase brings the company's total Bitcoin reserves to an impressive 18,991 coins, valued at over $2.14 billion at current market rates. This move underscores Metaplanet's unwavering commitment to integrating Bitcoin as a core reserve asset within its corporate treasury strategy, a plan that has been in motion since 2024. The company's proactive approach involves channeling capital directly into Bitcoin through a series of strategic financial maneuvers, including share issuances and bond redemptions. Earlier this month, Metaplanet also invested $11.8 million in 103 Bitcoin, further cementing its position as a significant player in the corporate Bitcoin accumulation race. The company's strategy, often compared to that of MicroStrategy, a U.S. firm renowned for its extensive Bitcoin holdings, aims to leverage corporate financing to amass substantial reserves of the digital asset. Metaplanet is not only acquiring Bitcoin, but is also actively raising capital to fuel its ongoing accumulation. This month alone, the company issued over 4.9 million new shares following the exercise of warrants, a move that bolsters its financial position and provides the necessary capital for continued Bitcoin purchases. Looking ahead, Metaplanet has announced an ambitious $3.7 billion share proposal designed to acquire even more Bitcoin in the coming years. The ultimate objective is clear: to surpass MicroStrategy's Bitcoin reserves by the year 2027. This aggressive expansion is spearheaded by President Simon Jarovich, who has consistently highlighted the long-term value proposition of Bitcoin as a superior store of value compared to traditional fiat currencies. Metaplanet's strategic maneuvers have also caught the attention of institutional investors, particularly following its inclusion in the FTSE Japan Index. This inclusion provides a regulated pathway for institutional capital to gain exposure to Bitcoin through a corporate vehicle. Industry analysts suggest that Metaplanet's success could inspire other Bitcoin-focused companies to seek similar index inclusions, potentially creating new avenues for institutional investment into Bitcoin via passive investment strategies. This trend blurs the traditional lines between stock market investments and direct cryptocurrency holdings, signaling a significant evolution in how corporations are approaching digital assets. Furthermore, Metaplanet is redefining its financial metrics, increasingly prioritizing Bitcoin yield over traditional profit and loss statements. In the first quarter, the company reported a 29.1% BTC yield, a metric that quantifies the growth of its Bitcoin holdings on a per-share basis, even accounting for equity dilution. This financial reorientation demonstrates a profound commitment to long-term value preservation through Bitcoin, moving away from short-term fiat-based returns. As Metaplanet continues to scale its Bitcoin holdings, its strategy aligns with the growing global trend of institutional adoption of digital assets, especially in regions like Japan, where regulatory frameworks are becoming more conducive to corporate Bitcoin investments. The market is watching closely to see if Metaplanet can indeed execute its ambitious plan, and whether its aggressive accumulation strategy will set a new precedent for corporate treasury management in the digital asset era. Now that we've seen a bold corporate push into Bitcoin, let's turn our attention back to the broader market sentiment. What do the charts and historical patterns suggest about the leading digital assets' next move? Red September looms, Bitcoin faces test at $100K support level. Concerns are mounting for Bitcoin as it breaches critical technical support levels, signaling increasing bearish momentum and a potential slide towards the $100,000 mark. We examine the technical indicators and seasonal patterns that suggest a challenging period ahead for the leading cryptocurrency. Bitcoin has recently experienced a significant downturn, falling 6.5% in August and breaking a 4-month winning streak. This decline was partly attributed to substantial outflows from US-listed spot Bitcoin exchange-traded funds, ETFs, which saw approximately $751 million depart, according to data from SoSo Value. These outflows indicate a potential cooling of institutional demand or a period of profit-taking following a strong prior rally. The breach of key support levels is a major concern for market participants. Bitcoin has fallen below the Ichimoku cloud, a comprehensive technical indicator used to gauge trend direction and identify potential support and resistance zones. Furthermore, it has dipped below both the 50-day and 100-day simple moving averages, SMAs, which are commonly used as benchmarks for short to medium-term market momentum. These breakdowns suggest a weakening of buying pressure and a potential shift towards a bearish trend. Adding to the bearish sentiment, Bitcoin has also broken through crucial horizontal support zones. These zones were previously identified by the May high of $111,965 and the December high of $109,364. The failure to hold these levels suggests that the market may be entering a phase of price discovery to the downside. Technical analysis reveals further confirmation of this bearish shift. The Guppy Multiple Moving Average, GMMA, which differentiates between short-term and long-term investor behavior, shows the short-term band crossing below the longer-term band. This crossover is a strong indicator of bearish momentum. Additionally, the weekly MACD histogram has dropped below zero, signaling a transition from a bullish to a bearish trend. These indicators collectively suggest a high probability of a sustained sell-off. Analysts are closely watching the 200-day simple moving average, SMA, which is currently situated around $101,366. This level is seen as the next significant support, and a break below it could pave the way for Bitcoin to test the psychologically important $100,000 level. The current technical outlook aligns closely with historical seasonal trends, which often see September as a bearish month for Bitcoin. Data compiled since 2013 indicates that Bitcoin has historically delivered an average return of -3.49% in September, closing lower in 8 out of the past 12 September months. This historical data reinforces the concern that the market may be entering a period of seasonal weakness. For the bulls to regain control and invalidate this bearish outlook, overcoming the immediate resistance at the lower high of $113,510, set on August 28, is considered essential. A successful push above this level would signal a potential short-term reversal and a renewed attempt to challenge higher price points. The market reaction has been mixed, with some investors viewing the current dip as a buying opportunity while others are bracing for further downside, citing the confluence of technical and seasonal bearish signals. That's a wrap on today's market analysis. We covered potential trend shifts, ambitious corporate plays, and critical technical levels. Don't go anywhere, because our lightning round recap is coming up right after this. And that's a wrap on another packed episode. We saw Bitcoin facing a tough September, Ethereum's bold institutional staking thesis, Metaplanet's massive Bitcoin accumulation race, and key technical levels being tested. If you got value from this update, make sure to hit that like button, subscribe to Bitcoin Bulletin for all your breaking news, and ring that notification bell so you never miss a beat. Also, follow us on all social platforms for more real-time updates. We'll see you in the next one.